Hey, hello, my wonderful people. We are back again today, and it's been a while since I last posted something, and I've been in communication with one of them got in touch with me. Can I use the term mentees? So he got in touch with me, and I felt bad seeing what he did to his account yesterday. So today I wanted to give you something simple yet doable and very practicable. Why? Because it's basically using support and resistance, and I'm back to my first initial indicator that I told you I was so proud about, and this is the TDI. Okay, and for this it's both spike catching and still it's spike catching and still you can scalp a few minutes, like 5 minutes, 4 minutes. Okay, and for you to get the TDI settings, please join our Telegram channel so that you can download it from our platform. There are different settings. For mobile you will download a PDF, and then for desktop you will download both for MT4 and MT5. So for boom and crash, this is how you use a TDI to scalp or to catch spikes. Okay, so I would usually maybe do this on a laptop so that I get to see all the four windows at the same time. I do it on a laptop, but I squeeze the view to be like mobile view, so it can be able to fit in all the four windows. Check here. It touched the lower Bollinger Band and it spiked. So anytime you are, this is what I'm talking about, anytime you have something like the middle Bollinger Band, the lower and the upper are like in a straight line, not you see, like here is a bit distorted, even here it's kind of slanting, still at the same time you see the circle was going down, so it is like facing down, and the Bollinger Band here was a bit inflated, like looking like a balloon, roundish, you see. So the right places to get spikes or to use TDI, if you want to do small scale trades without the help of any other indicator, it is in such, you see, like from this location to this location, when the TDI is practically on a straight line. Okay, you see it is on level 50 here. I think this is around level 30, and then this other one also. So anytime TDI is on such a straight line, it doesn't matter whether it is somehow down or middle or up, as long as it's straight like this, that is the right moment to use a TDI as support and resistance. And look here, it right from where it was, touch the upper part of the Bollinger Band. Anytime it touches the upper part of the Bollinger Band, as long as it's not gone out of the Bollinger Band of the TDI, just know that you have a room, it will reverse, okay? And even on top, it was still another, see, check here on top. It touched the top part of the Bollinger Band. But now this time around we are not even using the top. Let's just use the bottom TDI. So check here. It touched the top and it reversed. So anytime it spikes and touches the edge of the Bollinger Band, as long as it's not gone outside, you can place a few candles there. Okay, so I would have gotten like around 5 candles here. I would have bought around 5 candles and I'm out of the market. The same way when it touched the lower part of the Bollinger Band, as long as the Bollinger Band is on a straight line, I would have gotten this spike very well and very comfortably. Okay, I would have gotten this spike. Let's move ahead. We look for another setup like that. Such kind places here is not like the right place to trade using a TDI. I always love it when it is flat or straight. Let me use the term straight. Here is another wonderful setup. Do you see? So none of this setup, touched the upper Bollinger Band. So there was no buy, there was no sell positions, but there was buy position here. Did you see this here? And it went on spike. It was from this point here to this point here. Our Bollinger Band was somehow straight, so it was seriously a very range market. Why, when it is straight like this, it basically tells you we are on a ranging market. So the upper band and the lower band is strictly respected. Okay, so it will not spike past the upper Bollinger Band and it will not go past the lower Bollinger Band here. So I would have placed my trade here and I would have gotten a lot of spikes. Okay, another tip, let me give you another tip. Anytime you get this kind of setup and this horn or the peak where we are having now is the third peak. What do I mean? When the market moved out of a volatile zone, which is this around like a balloonish kind of a band, and then it came into kind of stabilized zone now here. This was the first peak, it spiked. This was the second peak, it spiked. This was the third peak. If you followed my earlier videos, I've told you the spikes come in threes. Okay, they come in sets of 3. And even the peaks of the resistance, it's like, it was kind of drawing an M. Look here. Comes, goes, and then comes down. And then now, because it was now retesting like this support for the third time, it just had to break through the resistance on top and go all the way. So anytime the peak you are using is a third peak, know that the market from there will be able to go back, like spike out of the normal resistance zone. Okay, now look here again. So this is like in an opposite direction, and I have not reduced this because it was outside. So it spiked from wherever it was, came to the peak there. So that is the first horn, the second horn, the third horn. So if you are to place your resistance like on top there and it's not gone above that, you would get placed as a trade. But on this, I would not, this would come in handy if it was a different strategy that I'm using. Okay, but now since it's the TDI that we are featuring in this tutorial, I can't use this because this is a different strategy. But did you see it went again 3 sets and then pushed until a level that it did not gotten to? Okay, so anytime you find like these 3 picks, not the market will break from that zone. Any 3 picks also on the resistance side, know that it will spike and it will go past the above known zone. Okay, let's still continue. I don't want extreme areas where the Bollinger Band is a bit of, look here. With this here, I would have gotten 5 candles. It touched the upper part of the Bollinger Band. I would have gotten, okay, for such a situation, I can comfortably place a trade on top here and come with it all the way down to the lower Bollinger Band because I know where the market will reach before it spikes. And since the top band is what has acted as resistance. So I know comfortably that I can come to the bottom, okay? But to be on the safe side, just do like 5 minutes and you're out. And again, the moment the lower Bollinger Band, it's spiked. Okay? So this is specifically using TDI to just place buys or sells, or TDI, okay? As long as it touches the upper part of the Bollinger Band and it didn't go out of it, place a sell. You come down with it, 5 candles close. When it reaches the bottom of the Bollinger Band, place a buy and it will go. And you see, even we here when it spiked, as much as it is 2 spikes on top here, but down here, do you see it came, it spiked to the mid part of the Bollinger Band. Do you see that? Upper middle part of the Bollinger Band, like the market baseline, and then from there now the market was able to reverse and break free from that zone. So another key point when you want to place a long-term trade and the market has been like on an uptrend for some time, like in this situation, it's gone up all the way. So you can comfortably use TDI, like it was in the middle here, spiked to the top of the band. It didn't go past it. Neither did the Bollinger Band try to expand to form something like this earlier balloon here. So the Bollinger Band remained just on a straight line as it was. So it spiked to the top of the Bollinger Band. It didn't go outside. It tells you the market at that time is being contained, and the number of buyers and the sellers in the market, it's like it is balancing, okay? Or the buyers at that time could somehow be losing momentum. So it spiked, but they were contained. It came all the way down to the lower part of the Bollinger Band. It spiked, but to the middle of the Bollinger Band, and then from there now it came and break out of that area. So anytime you will find the middle part of the Bollinger Band is what has been used as a resistance, know that the market will break free from the lower band and just go out all the way out into the sellers area, okay? Like how will it break from buyers area into sellers area? It must come from the top of the Bollinger Band to the bottom of the Bollinger Band and then a spike to the middle. So check it very well. Every time the middle Bollinger Band is used as a resistance, the market will break free from that point and head all the way down. And it does not apply only for the sell positions. Let me look for you for a buy position. A buy position where spikes come when the middle Bollinger Band has been used as resistance. Okay, before we get another setup, here are other places. See, like here, the top Bollinger Band acted as a resistance, so you're supposed to have gotten a few candles from there. This again, the top of the, so I would have gotten all these trades, like I would have gotten from that, come down with it, and then place a buy trade at the bottom here, go up with it, and then when I reached again the top, I would have placed a top one, because I know the spike cannot go above the Bollinger lines if and when they are in a straight line like here, okay? When we are in a straight line like here, the spike can never go above the Bollinger Bands. So you can comfortably place your sell trade here and come down with it, and you see it reached again the lower part of the Bollinger Band and then spiked again. So this time round, it just went way above the middle Bollinger Band and then broke free of that zone. And if you can count again from here, it is in a zigzag of 3. First, second, third, that. So 3 picks, first pick, second pick, third pick, and it was off that zone. So take it, the market, this boom and crash, The spikes goes in sets of 3. If it is peak, you will count 3. If it is resistance in a ranging zone, you will count 3. Like the next time it would reach here, this point, like I've gotten the previous 2 points. The fourth time it will reach here, I will not place a trade. Why? I will know that this is not the time to place. It is like the fourth peak, so it will not work. Okay, but the third peak, it will comfortably work. The second peak, sometimes you are, if it was on a straight band like here, I would have gotten the second spike. But if it was a different strategy I'm using, it's not a TDI, I would have somehow maybe missed the second spike, but I would have gotten the third spike. But since it is a TDI and you're using it as a support and resistance, so I would have gotten this. I would have missed this first spike because I was not so sure, but I would have gotten this second spike, and I would have gotten this third spike, and I would have also bought from on top here and came with it all the way to the lower part of the Bollinger Band, and I would have also sold here and came all the way with it to the lower part of the Bollinger Band. Okay, so it could be small trades, but when you combine these trades, they will give you something at the end of the day, especially if you are doing it on if you're using your laptop screen to be able to scan the market, how it is behaving. So you will always see here. It spikes, goes to the top part of the Bollinger Band, then comes down. So maybe if you are fearful to place this trade, you could have gotten it down here when it touched the lower part of the Bollinger Band. It spiked, went to the middle, came down, and then now another massive spike going up. Okay, but when you see the Bollinger Band around this area, it was on a very straight line, so it was somehow telling you it is a good area to buy, to sell, I mean, until when it reaches like the lower part of the Bollinger Band. But I wouldn't advise you to sell. Okay, I wouldn't advise you to sell if you don't get such a resistance point here. You know, get the resistance point like it is coming from the middle, from the top of the Bollinger Band, and then buy a few candles and be out of the market. Here I would have gotten this spike, and I would have gotten that spike because it spiked immediately when it touched the lower part of the Bollinger Band. Okay, so you see this spike, it was a long one, and I know why I would have gotten both two spikes, because when it was spiking here, it was like a third peak. I don't know, let me go back so that you can see. It was like a third peak. Sorry, this is the first peak during the market trending time. This is the first peak, this is the second peak, so this was the third peak. So on every third peak, the market must spike in a very big way. Okay, so that is why you see you got all those two spikes. Okay, so that for me was a very straightforward trade. I want to pick the arrows, and another point that I've always touched on my tutorials is that is a divergence. So it would have been a very, very, very wonderful trade. As long as you're getting a divergence, like what is happening on the main chart is not agreeing with what is happening on the indicator window, then that is a very good position to catch them spikes. So the lower part of the Bollinger Band here was your entry point, and just like that, it spiked. Two massive spikes. So if you really set to trade spikes on boom and crash, you can really make it. And just try to find one indicator to use. If you want to stick to the TDI, well and good, and TDI works wonderful if you are able to master it. Okay, so this was basically a simple tutorial for today. Such a position, I would have placed a trade. This area, when the TDI is like on a straight zone, I would have placed a trade, especially this spike. I would have gotten this spike very comfortably. I would have gotten that spike. Okay. I would have also gotten the second spike. This. Let me tell you how I had gotten it. At the bottom here, the lower Bollinger Band of the main chart was acting as a resistance, so I knew the market would head nowhere at the bottom part. Yet again, at the indicator window, the middle Bollinger Band, which is the market baseline, acted as a resistance. This here, it acted as a resistance. To add on top of that, I always find like 3 reasons to place a trade. To add on top of that, there is this divergence. There is this divergence. Okay, so that was a very, very nice position also. So I would have gotten both of those 2 spikes in a very comfortable way. Okay, so, and you see, I'm just using one indicator, nothing much, just the divergences and the Bollinger Bands of the TDI acting as support and resistance. And for this, I can buy and sell comfortably. Like if it uses the top of the Bollinger Band as resistance, I will sell. If it touches the middle of the Bollinger Band and there's, as long as this point is coinciding with this point being at the lower part of the Bollinger Band and here middle Bollinger Band, and still at the same time there's a divergence, I would still have placed. So with this kind of setup, you can always get approximately, if you are keen enough, you can get up to between 20 to 30 trades in a day comfortably on all pairs. Like if you're viewing on a desktop, like you're having all the 4 windows open, so you can comfortably get between 20 to 30 trades in a day. Let's say even you don't want to catch the spikes, you just want to scalp, which is to get like 5 candles and you're out. So if you're able to get 5 candles of 5 minutes each, anytime it touches the top of the band, like here, it touches the top of the band, it's not gone out, you are so sure of getting your 5 candles and you're out. Okay, so with 30 trades times 5 candles, that would be a whole like 150 candles in a day, and that is on an average day. 150 candles, and 150 candles, if you have very good how can I put it, very good capital, not even like good capital, with capital of like $200 in your account, you can comfortably place 1 lot size in such setups, because I know when you get this kind of setup here, it will not spike on you. So you can comfortably place a trade of 1 lot size, and for 1 lot size, every 5-minute trade, that is $5. Okay, so 150 candles, that would have been approximately $150 for that day, and you're good to go. Okay, so being in the market really involves a lot of money management. Know how much is in your account, how much is your capital, and get a very strict guideline of one strategy and stick to it. The third point is so your very strict money management. Know your target of the day. If you say you want to place 30 trades of just getting the candles, not the spikes, make sure you hit your target and be out of the market. Don't be greedy. Okay, the market is not your brother. Get whatever you're getting for the day and be out of the market. Don't be greedy. Okay, so, and I believe with that you'll be able to build your account, because if you're able to get such 30 trades in a day, which is like 150 candles, and you are able to add, okay, let's say your account is very minimal, like $50, and for $50 I would recommend you to use to use a 0.20 or 0.30. That you would have still gotten around between $30 to $50 into your account, an addition like profit. So you can comfortably double your account of $50 with such kind of setups in a day. And so by the following day, you will be starting to trade with $100 account, not $50 account anymore. And you just build your account like that to whatever, whatever point you want. So having a small account in the market is not a crime. Money management is the real crime. Like, you have to manage your account very much. Another thing, let me touch on this, is for boom and crash, binary.com added increased the volume lot. The smallest is 0.20. So if you have an account less than $20, open a 0.22 lot, close 0.20, let 0.2 run. Okay, because if a spike gets you with 0.20 lot in a $20 account, it can take even up to a quarter of your account, which is like $5, and that would not be good. Okay, so place trade according to your lot size. Place trade according to your account size, and be very keen that they've increased to 0.20 does not mean you cannot